In this class, we focus on two topics under macroeconomics, which are economic cycles and some key economic issues, the effect of key economic issues. Let's start with the economic cycles discussion. An economic cycle is the overall state of the economy as it goes through 4 stages in the cyclical pattern: expansion, peak, contraction, and trough. Remember, there are 4 stages in this cycle or in this cyclical pattern. 4 stages. And we have this chart to explain how the economic cycle works. We have the output or the GDP, we have the time horizon, and it assumes the business is going through a process called economic cycles. There are 3 approaches to measure GDP or gross domestic product, while one of them is called expenditure approach. And the equation of expenditure approach to measure GDP is the same as aggregate demand, which is consumption plus investment plus government spending and plus the differences between export and import. And here the equation that you should be familiarized with. When there is an economic cycle, let's explain how does it work. We talk about the contraction or recession first. When the economy is at their peak, then the recession starts. When the demand falls or begins to fall, like this, firms respond to the fall in demand by reducing their input, causing a decline in purchases of raw materials and hire less workers. Even afterwards, even they will cut their labor forces, then create the unemployment. The reduction in demand will feed through into household incomes. Initially, the people will still consume because they just lost a job. But after a while, if more and more people are unemployed, then the people will be a bit conservative, or even they will cut their spending. It results in a further reduction in demand. So in the so-called second stages, the overall demand in the economy will be shrunk or will be reduced significantly. Then the economy will quickly move into the slump, and with no business confidence and little incentive to carry out investment. Once in the slump, it can take a long time before the economy begins to recover. So here at the bottom, they call trough, or at the bottom of the economic cycle. Eventually, like here, the trough, eventually there may be some new innovation or invention that push the entrepreneurs to invest. Then the economic activity begins to pick up. So when more firms are positive on the economy, they intend to invest more. It helps to improve the overall business confidence as well as the consumer confidence when more people are going back into the labor market. As said, the more investments, the extra investments will push up incomes, which will convince or persuade the consumers to spend more, and this will induce more investments, reducing unemployment. And the economy expand and expand, going up and going up until the full capacity is reached, and then another economic cycle for contraction begins. After explaining the economic cycle theory, let's take a look on some arguments on the government. Some economists argue that the one role of governments is to smooth out the pattern. We just explained the economic cycle pattern to avoid so-called the boom and bust years. When the economy is booming, the impact for individuals and households includes like low employment, rising house prices, high levels of confidence, and increasing consumer spending. So for individuals and households, they would like to spend more because they are optimistic about the future, about their income level in the future will keep an increasing trend. But on the other hand, when the economy is going into the so-called bust time, the individuals or household may experience job losses, and people losing their homes when unable to pay mortgages, fall in labor mobility due to negative equity, and bankruptcy, and no confidence. So when the economy is so-called in the bust time, the people are losing confidence. No matter it's individuals or households, they will cut their spending, they will cut their consumption. Then it is a negative impact to the overall economy. For the firms or company side, when there is a boom, when the economy is boomed, they can see a growth in profitability. They can see extra competition as new firms are established to compete with them. It's quite usual to see this happening because when the economy is booming, the chance to make money becomes easier than before. So a lot of the competition will go into the market to compete with existing firms to grab the market and to make profit from it. But when it is a bust, the firms are facing corporate failures, falls in profits, and excess capacity. Excess capacity means the demand is decreased, so there's no need to have full capacity for the production line, say, to produce the same amount of goods as when the economy is booming. So they have to cut the capacity when the economy is falling into the bust time. After explaining the economic cycle or the economic cycle concept, here are 4 key economic issues that I would like to address your attention, because you have to remember how they are affecting consumers and business, for both consumers and businesses. First, economic growth is one of the key economic issues that we would like to address. Second is inflation. Third is unemployment. And the fourth issue is balance of payments, also known as BOP. We will explain these 4 issues one by one. The first economic issues that I would like to explain is economic growth. For economic growth, it means that the aggregate demand is increasing. So should it be happy for everyone? And we have to explain both pros and cons for the economic growth on a country side or point of view. The benefits of economic growth. First, more goods being demanded and produced, because the firms or companies are more positive or optimistic to the economy, so they will increase their production line and their investments to produce more goods for the higher demand. So more goods being demanded and produced. If it happens, it means that more jobs will be created in the economy, meaning more people will be employed. And it also leads to it also leads to more people, or the people can earn more with higher living standard. But there are still problems when the economic growth is too fast, or there's some so-called side impact of economic growth. The first one is about the gap between rich and poor. Under economic growth, it is not a fair game. That is, everyone can be benefited. Maybe some can enjoy the economic growth more than the others. So there is a gap between rich and poor, which is widened as growth benefits may not be fairly distributed. Some people may be better off, but not for all of them. And second, the growth may be an expense of the environment or expense of the government, because when the economy is growing or booming, more factories will be built. At the same time, maybe some of the land for the forest, for the woodland, or for farming has to be used to building the factory. So it is at the expense of the environment. And the economic growth also leads to rapid rises in price, increasing inflation. Not all governments can manage well on the country's inflation level. When the economy is booming, they are happy, but at the same time, it also beat up the factor of production, like the rent for the land. One of the factors is land, and the rent may be increased because the demand for the factors of production increases, and maybe for the labor, demand for labor increased, and it also push up for the wages. It also means the price level increased. Then ultimately, it will increase the inflation. So that's the benefits and problems of the first issue is economic growth. The second issue that I would like to draw your attention is inflation. Inflation, what does it mean? Inflation is the rise in the prices of goods and services within an economy over time. What does that mean to you and to the consumer? It means that there is a reduction in the purchasing power of money, and each unit of currency for buying goods and services will be decreased or will be fewer. That means if you have $10 today, if there is a high inflation, and today you can buy, say, 1 bar of chocolate with $10, for example, maybe tomorrow or 1 week later, maybe the inflation is super inflation, although they call it hyperinflation. $10 can no more enough to buy a bar of chocolate. Maybe you need, say, $15 to buy a bar of chocolate. Then it reduces your purchasing power of the money you kept. So in some cases, inflation may rise rapidly while economic growth slows. We just mentioned about the economic growth. Economic growth is not the same as inflation. It doesn't mean that when there is an economic growth, inflation occurs. Sometimes inflation may rise, or there is inflation, but economic growth is too slow or even no growth. This is referred to as stagflation. The problems of high inflation. Here, we would like to share with you 4 key issues of inflation. First, consumers may purchase fewer goods, reducing growth in economy. Because the prices rise, they would like to keep some cash to buy some important goods. They will have consider whether they need to buy a good now or not. So it reduces the growth in the economy because they reduce, or they may reduce their purchase. And second issue or second problem of high inflation is the employees will push for higher pay rises. it's quite simple, because when the employee, they take the salary back at home and see they cannot buy enough, they cannot buy enough food, it will push them to request a higher salary increase when they go back to their office or in the factory, in order to have a higher salary, in order to match the high prices in the economy. And for other costs, like raw materials, will also rise for businesses. And it's possible for the firms to make a decision to hold back the investment or reduce the investment and production, because they have the uncertainty on the price level for, say, the raw materials. They would like to keep some more cash instead of to invest for future. So they are a bit hesitate in investment due to very high inflation in the economy. And for those people relying on fixed income, maybe the students or pensioners or some age group, they will hold back their consumptions, because they don't know how high of the inflation, and they would like to keep their money to spend only on those necessity, or those the so-called must-spend goods. They will find themselves worse off. So all these four problems of high inflation are critical and be remembered. The third economic issues that we would like to draw attention is unemployment. When there is an unemployment, it means that some people are willing and able to work, but they cannot find a job. There are problems and benefits of unemployment to the economy or to the individuals and firms. For the problems, government will suffer a loss of income from the tax, because when the people are unemployed, they don't have salary income, they don't have to pay their income tax. Maybe they keep their money in their bank accounts instead of spending or to do the consumption. So on the other side, the value added tax and other taxes as a revenue for the government will be reduced as well. And next thing is on unemployment benefit. Because when the people are unemployed, they will claim their unemployment benefits from the government. From the government point of view, reducing their income because less tax is collected. At the same time, they have to pay to those unemployed people in the society. The overall government's financial situation will be worse off. And the third problem is about workers. Workers concern their own job security. If they are losing their jobs, how confident they will spend or invest or consume. So it damages the consumer confidence. And ultimately, it will also hurt the business or the firm, because the overall demand is also reduced. But there are still some benefits when there is unemployment. For business point of view, it is easier for them to find the right employees, because in the past, maybe the job market is too tight, it's very difficult to hire talent for the company. But right now, due to the unemployment is going up, so it's easier for a business to find the employees in the market, and it reduces the amount of wages that need to be offered to attract new members as staff. And last but not the least, for those existing staff may be more willing to take lower pay job or lower pay set increases, because in the past maybe there's a high inflation and a very tight employment market, so the people can ask for a high or a very significant increase in their salary. But when there's unemployment, the overall unemployment is high, then existing staff, they are maybe willing to take lower pay job and maybe work harder than before. And the final economic issues that I would like to share is balance of payments. Balance of payments for a country, it records all financial transactions made between individuals, businesses, and its government with foreign consumers and organizations. So it's about a country and foreign consumers and organizations. Okay, a countries including individuals, including businesses, and governments. So there are three types: individuals, businesses, and governments, and how the transactions between them with foreign consumers and organizations. For balance of payments, you can imagine there is at least three parties involved: individual, businesses, and governments. So you can imagine that there are three parts of balance of payments incurred day to day. First, the current account, or the goods, about import and export of goods and services, because country A and country B, they have the trade relationship. Maybe country B export apples to country A, so the people in country A can enjoy the apples, and maybe country A have the oranges to export to country B, so country B people can enjoy the oranges from country A. It's about the goods trading between two countries. We call it current account because it's measured about the import and export of goods and services. Next, capital account. Capital account is the net change in ownership of foreign assets. Foreign assets means loans or any receivables between the government and other countries. So for the capital account, it is about, say, the capital asset or foreign assets, the net change of them. And last but not the least is financial account. It's about the cash flows. And here in Business and Technology paper, we are here referring BOP, balance of payment, to only on the surplus or deficit of imports and export right now. So our discussion is on current account. And what is trade deficit? Trade deficit here means that there's a net cash outflow or net outflow of cash from the country. In other words, if you remember, there is export minus import. So if there's import, there's M here in the equation is larger than export, X here. So to a country point of view, it is a net outflow of cash from the country. For the GDP measured, the overall economy is affected or negatively affected by this change or by this trade deficit. On the other hand, if exports exceed imports, there is a trade surplus. There is a net inflow of money into the country. That means that, say, country A and country B, country A export more of the oranges to country B than importing the apples from country B, given that the value here, oranges, is much more expensive, or the amount collected from selling oranges is much more than the payments on the apples. So question time. In this in-class question have 4 statements. You are asked which statement is true. First, economic growth always brings benefits to all members of the society. So here the key is always. Whether is it always or not. If not, then it's not true. Second option, the option B, economic growth can lead to an increase in imports. So remember the formula, aggregate demand. Okay. C, inflation. Inflation does not affect those on fixed income as much as those in employment. Is it true? And D, inflation encourages investment in the national economy. So first, economic growth. Here we have option A and option B is about economic growth, the first issue that we discussed. So you have the clue about whether it is correct or not. And for inflation, we have these key problems of inflation. So you can remember, okay, if you can remember my words about the inflation, then it's not difficult for you to identify whether they are true or not true. The second question in class practice, which of the following are consequences of unemployment? Three statements. Okay, first, there is less pressure for the government to increase taxes. Second, there is reduced economic output. Third, there is greater inflationary pressure in the economy. So here is about the consequences of unemployment. Unemployment is not a good thing. So is it true that the government to increase taxes under unemployment or high unemployment time is easier? So it's less pressure? Is it true? And second, whether unemployment reduce economic output. Okay, if you are unemployed, do you spend more or do you spend less? Okay, imagine. So finally, whether the aggregate demand will be increased or decreased, because consumption is one part of the equation for measuring the economic activity or economic output. Third, there is greater inflationary pressure in the economy. Whether is it a consequences of high unemployment? Okay, whether it is high demand for the goods and services in the economy, so that there's greater inflationary pressure. Is it true? So here are some clues for you to answer this question.